Good day, ladies and gentlemen, and welcome to the Arterburn radio transmission. I am Angry Tiger, otherwise known as Franco Mate, filling in for Tony Arterburn. Big shoes to fill today. I will do my best. I will do my best not to remove myself from the stream. I will do my best to fill Tony's shoes. Couple of technical issues over here on this end, but I think I'm going to have them ironed out in a minute. Not even sure if you heard the intro, but that's okay. Here we are. We're going to be good. Got a lot of news for you economically. We are going to cover a lot of different things. I think you're going to find a lot of the information very, very useful. I hope so. Looks like I have lost every single bit of information I had up for you. Isn't this just great? It's going to be okay, though, because I am Angry Tiger and I'm used to this stuff. This is what happens when we try to do different things. Very interesting. Hope I'm still online here. What a mess. There we are. There we go. I'm back. I am back. And we got a lot going on. I'm going to go ahead and jump into it with you all. I'm going to share the screen here. Don't know why exactly things are looking the way they are. I'm not used to this setup, but we're going to rock and roll. All the radio listeners, want to introduce myself. I am Angry Tiger, Franco Mate, and we've got a lot going on. We got tariffs going to kick in tomorrow. We've got quite a few things to talk about. I'm going to pop some of these up for you, ladies and gentlemen, and we should be pretty good here. Let's start with a couple of different things. And here we go. All right. We're going to start with some tariff talk, and we're going to start with some inflation numbers. Get ready to rock and roll here. So, first story of the day. Tariff uncertainty resets inflation. July interest rate cut bets. So basically, our inflation rate, it went up, and also the CPI went up, the consumer expenditure rate. And they like to say that that's a good thing, but that's actually alchemy. Why are consumers spending more? Consumers are spending more because things are costing more. It's a very, very simple formula. There's no rocket science to be had here with this. Oh, thank goodness. Everything popped up for me. This is actually grand. And we're up to 2.6%. We missed the target rate that they had. And basically, it's going to keep going. Inflation is a firestorm. Tariffs have something to do with it, but they are not the be all and end all of why inflation is where it's at, as the mainstream media would like you to believe. What is happening with everything right now is we've simply created far too much fiat currency. And you go back to the basic rules of economics, and there's too much currency chasing not enough goods. And the goods, because the purchasing power of the currency, they're costing the consumer more. So of course, this consumer expenditure rate, it's going to be more because they have to spend more to get what they need. We're looking at ridiculous price increases across the board. Boy, I'm so happy I got everything up and running here. Here we go. All right. I'm a market guy. I study the markets. I really pay attention to the bond market, the 10-year yield, our T-bills. And the reason that I do that, if you're new and you haven't heard me speak before, the reason I do that is because everything is based on debt. And what is a bond? If you're new to this game, a bond is debt. It's a bet. It's a promissory note of value in the future for those who buy it. Why would anyone want to buy debt? That I really can't tell you. It doesn't make any sense to me at all. But that's how the game works. If you made it so that the Federal Reserve could not issue $1 in debt, this whole system will collapse. So the whole system is predicated on debt. So it's like last night I was explaining, it's like having a glass table. All right. The bond market's the glass table that the entire market and economy sit on. And there's a bunch of small children, and they're tying M80 firecrackers to the bottom of this table. And they light this fuse. And guys like Tony Arterburn and Angry Tiger and Gregory Manarino and Gerald Salente, we're watching the fuse, right? Slowly work its way up to the M80s that are on the glass table there. And it's maddening to watch. And we try to report things to you guys and girls out there in a way that doesn't sound too terrible, but it's almost impossible because it is terrible. If you just joined us, again, filling in for Tony Arterburn, Angry Tiger here, we are going to make this a pearl button bangled Billy of a show. I will do my best. Had a little bit of a rough start, please forgive me. But just before I went on, all of my stuff blanked. I don't know what my computer did. It like reset itself. I went to go get a drink of water and I came back and like everything was gone. I'm like, oh, that's good. I have 30 seconds to fix all this. So I am sorry for the rough start, ladies and gentlemen. That happens when we don't have a super producer around. So definitely something to, please forgive me. And I hope Tony can forgive me. But U.S. government 10-year yield. I watch this. If the 10-year yield starts getting above 4.5%, the markets get a little nervous. We hit 5% and it's panic, like their hair is on fire. They're running around screaming and the Dow Jones dips and everything dips and everybody. Usually there's a knee-jerk reaction to the dollar. Speaking of which, so we're going to do some numbers on the markets. They're open right now. These are not closed numbers, but they got bad news today. And normally, I've been watching the markets for about 20 years now. And normally when they get bad news about inflation or any other kind of bad economic news, the markets, it's reflected in the stock market. The Dow Jones will dip, the S&P 500 dips, the volatility index shoots through the roof, the NASDAQ dips, everything dips. The dollar, usually there's a knee-jerk reaction to the dollar and it goes up. Usually the 10-year yield will rise a little bit because there'll be a panic sell-off. And precious metals usually will go up. In most cases. Okay, but that's not happening, and that hasn't happened for quite some time. I've been watching the relative strength of the dollar, and we have been below support level, which is a nice support level. Would be the bare minimum would be 103, and they like to see it between 105 and 106. That's a good support level. But we've been below 100 for over 70 days. We're working on 90 right now. I think we're in the 80s right now. I haven't done an accurate count of it, but that's a scary thing. And why is that? Well, that's because people aren't trusting our dollars anymore. They're dumping our bonds. Foreign countries are dumping our bonds left, right, and center. So we're in trouble. The devaluation of the currency has accelerated, and it seems ever since the new administration took office. And if you are a Trump supporter out there, I'm not really picking. I don't have a partisan bone in my body anymore. I'm looking strictly at economic policy and economics. So if you're listening to me on the radio and you haven't heard me talk before, and it sounds like I'm being rough on Trump because he's on the right, that's not the case. Again, I am an atheist when it comes to politics, and I just look at the facts and I tell you what I think. So this administration, in my humble opinion, have come like a three-headed monster. Ghidra, you ever seen Ghidra and Godzilla? It's the three-headed monster that shoots lightning bolts all over the place. Zap, zap. It makes these crazy noises. There's no way I could make that noise. But anyway, so Ghidra, the three-headed monster, he comes in. The first thing the three-headed monster does was say, oh, let's put some tariffs on everything and, make prices go even higher for the consumer. And so that lightning bolt is, destroying the economic landscape. Just picture the economic landscape as Tokyo, one of those little models in the movie. It's just blowing up bridges and buses are flying around and buildings are crumbling and people are running and screaming with their hair on fire. And then the second head of Ghidra, he's got lightning bolts as well. He looks over, he says, you're doing a very good job, first head, but I have some more lightning bolts for you. And that is the administration calling for a weaker dollar, calling for lower interest rates. And that is going to further weaken the purchasing power of the dollar. And so that head's going bomb, taking out some nuclear power plants. And again, the people are running around and So the third head of Ghidra, he's looking at what the other two heads are doing. Said, you guys have laid down some groundwork for me. My lightning bolts are going to be a tokenized society. My lightning bolts are going to be a stable coin. That's what we're going to do. We're going to do the lightning bolt of stable coin to further destroy the economic landscape and put the consumer into chains. And we're going to get into why I think that about the stable coins. So anyway, so we had the Dow Jones Industrial. They're not acting. It's not totally the market, again, disconnected from reality, disconnected from the real economy. It's not bad right now. We're sitting at 44,000 and 23 basis point drop. No big deal. Volatility index didn't really move much. The Dixie sitting at 99. There's a small knee-jerk reaction to the dollar yesterday with some fear trading going on. NASDAQ at 23,000 points. And the S&P 500 sitting at 6,395 points. A 10-year yield at 4.34%. Crypto across the board kind of got hit harder, actually, than the market did with the news of higher inflation. Gold and silver. So we have gold sitting at $3,291. Did not move too much from yesterday, maybe 0.5%. Silver sitting at $36.56. It's down basically 1.50%. And again, Bitcoin sitting at 118,000. Major ones like XRP were sitting at 309. So the crypto market's not real happy. Crypto has not been acting right ever since government got involved. Government must get their hands in everything, and it's not exactly the best thing in the world. So again, we go back to the article I opened with. When I was discombobulated and everything was flying around, and I just pulled this article out of my downloads, but now I have all my tabs up, which is excellent. So inflation continues to rise. We know the numbers are skewed. When they come out with numbers, they usually have to revise them. Even the Bureau of Labor and Statistics admit that their numbers aren't accurate. So why have them? I mean, that's their job. It's like making the numbers be exact. That's their job. That's what they do. Now, you could make a mistake here and there. That's okay. Everybody's human. But they have to revise every single time. Jobs numbers, inflation numbers, the PCE numbers, all of it. It's constantly being revised. They're not very good at their job. I would get fired if I was that bad at my job. Good thing I'm not. Okay, so inflation went up. Is that a surprise to anybody watching this broadcast or listening to this transmission? Absolutely not. Of course it's not. Okay. And back to the stock market. I do a little jumping around. I'm not as calm as Tony. I wish I could borrow some of his calmness, Shout out to Beans the Brave, by the way. In lieu of Beans the Brave not being, here on the broadcast today, we do have Bouncer the Dude Dog Ninja Hound, and he does patrol just like Beans the Brave. For varmints with tyranny on their breath and lice in their beards. So just a shout out there to the hounds. The hound dogs are awesome. All doggos are awesome, aren't they? Anyway, so why does the stock market, one of the reasons the stock market is so disconnected from reality? Well, we've all known there are zombie corporations. We all know that there are the Feds in there buying the debt. That's why we watch the 10-year yield. You can watch the Fed buy the debt. They've been doing, and the amount of money they have to spend or create, to do this, is it's not on their balance sheet. Most likely in the quadrillions to keep buying that debt and keep that 10-year yield low, to keep the markets happy, to keep the money flowing into the markets, to keep what we call the Cantillon effect going. And the Cantillon effect simply is the money going to the top. Now, this isn't like liberal Marxist Bernie Sanders talk. This is real talk. The money flows to the top. All right. They mail invest it. They play with it. They play with it in the casino stock market. Okay. And they make interest off of it and they make big money off of it. The people who own the stock market, 90% of the stock market is owned by 1% and 2%ers. That is a truth. Okay. So that they have it right there. Okay. But they're totally against the free market. If we had a free market, we wouldn't have to worry about that. There would be true competition. Okay. But we don't have a free market. So the 90% of the market's owned by the 1% and 2%ers. The Cantillon effects makes us poorer and makes them richer. That's the most basic way that I can explain this. And it is a truly heinous thing for the working man and woman, for the regular Joe, for the blue collar middle class person. Even the upper middle class are now feeling the pain of the purchasing power of their currency. It's totally being sucked out by the snake-headed gypsy tin benders at the Federal Reserve. These tin horns at the Federal Reserve, they are so shiny, you have to squint when you look at them or you'll go blind. You need a welding helmet, put it on so when you look at them, because they're so shiny, just so fake. It's just unbelievable. As Tony likes to say, fiat is fake, it is head of the snake. So federal government becomes major investor under Donald Trump, echoing wartime scale. So the Trump administration has been making significant investments in U.S. companies, a move not commonly seen outside of major crises or wartime. This includes taking stakes in companies and embracing state intervention in industries deemed crucial for national security. It's always an issue of national security, ladies and gentlemen. What happened? The Trump administration's investments include a controversial merger between Japan's Nippon Steel and U.S. Steel, where Trump now holds a golden share, giving him veto power over major business decisions. So a golden share basically means that if you own shares in a company and you have 51% of the shares, and versus the people who have 49% of the shares, the person with the 51% of shares, they can call the shots. Usually there's a little negotiating and everything like that because they don't want to, upset their other shareholders in case they could always do a sell-off. But in this case, that's not going to happen. But they have the power, and they're going to say what's going to happen with said stock or asset that they're involved in. Additionally, the Department of Defense has agreed to purchase $400 million equity stake in rare earth and MP materials, becoming the company's largest shareholder, reports CNBC. You know who has the golden share? I do, Trump said at the summit last week. This level of federal support for a mining company is unprecedented. Garcelin Bhaskaran, who is an expert on critical minerals in the Center of Strategic and International Studies, told the outlet. And basically the moral of this story, I don't like doing book reports. I like cutting right to the chase. Again, I like to speak in working man's English, and a lot of this economic gobbledygook, it's not put in working man's English. It is highly convoluted with I would say alchemaic vocabulary, to put it in a very succinct way. They don't want the normal working man and woman to understand what's going on in the economy. They want it to be this mystical thing that you need somebody like Neil Cavuto who he'll get up there and stuff cannolis in his nostrils and eclairs in his ears and tell you all about how things are good, or, and explain to you things in a Keynesian economics viewpoint, or Kramer who eats 5,000 powdered donuts before he goes on and talks 5 million miles an hour. And actually, Kramer, he does stock picks, and his record is atrocious. So these guys are Keynesians. They don't look at things from an Austrian-based economics way, which a guy like Tony and myself and other great economists that we learn from the Mises Institute, stuff like that. We look at it in Austrian economics way, where we're dealing with real numbers, real money, the human action, the natural action of the market, things a central planner can't plan for. And when we're living in a centrally planned economy, we're going to have all kinds of problems, because you can't plan for everything. If you're a student of Ludwig van Mises, you understand that the human action. I recommend that book highly. The Creature from Jekyll Island, and then go to The Human Action by Mises, and you will be extremely well-rounded in the thought of Austrian economics and in banking and the banking cartels and how they operate and have operated through the ages to control us, the peasants. Anyways, so all this inflation, all this stuff that's going on, what does this mean? I always explain it like this. Inflation, which we've been watching for quite some time, inflation, it affects you. You're on this financial ladder, right? And everybody's on a certain level. You have the middle class, all right, and it's nipping at their heels. At this point, the middle class, we're at mid-level. Okay, the snake of inflation is constricting and planning to consume its meal, the middle class. Okay, and we're halfway in its belly. All right, our body's sticking out of its mouth, and we're going, oh my God, financially. Okay, so they're hurt bad. The upper middle class now. These are people who make $150,000 and above, according to The overseers, they're upper middle class, but they are now starting to feel the snake of inflation constrict around them. So U.S. delinquencies jump for upper income borrowers. Those making at least $150,000 annually see post-due debts rise fastest. So in other words, these are loan defaults and late payments. So people are making $150K year to year from this time last year till now. Actually, no, excuse me, from 2023 till 2025. That has gone up 18% defaults and late payments for those who are considered upper middle class. Lower in regular middle class, we're looking at 11.4% increase in 2 years, and those making under 45,000, which would be considered poor, 8.1% increase in loan defaults over 2 years. And these numbers are probably skewed a little bit. These are the numbers that the St. Louis Fed is offering up, and that this publication, who did this come from? What publication is this? Bloomberg picked up. So the consumer is not healthy. Everything we've been talking about is coming alive in front of us. You can't run from this. There's nowhere to run. There's nowhere to hide. We're in this beast-like system. We must use fiat currency. With that being said, this is not financial advice. I'm very fond of precious metals, and I think that is the way to protect your investment, your time. You're investing your time in gathering fiat currency. So maybe you can retire. So maybe you can have a good life when you get to retire at the age of 70 or whatever it is they want you to retire at. Okay. Freeze. Not only are you going to freeze the value of the money and the time that you've invested to gather this money, okay, when you put it into precious metals, you're also, no matter what, precious metals are always going to be worth more than fiat currency. Okay. So it's going to slowly increase. It's almost like an investment. All right. It's not like an investment on the stock market where you have a margin of 25%, you sell and you make a bunch of money. This is something that you can trust. This is something that over time will always be worth more than fiat. And as the value of the fiat declines, the purchasing power declines. Okay. Your precious metal holdings, the value of those are going to increase. Okay. It's not an over the night thing. These aren't get rich quick investments when you go into commodities, hard commodities. These are things that you sit on. Okay. Like a wise wolf. So keep that in mind. And that is not financial advice, by the way. We're going to go on to the next thing. All right. Tariffs. With Trump's tariffs deadline tomorrow and multiple nations with still no deal, this is what is about to happen. Moreover, and to date, the U.S. has not gotten even one single comprehensive deal whatsoever. That does not include either an import tax, tariff on American citizens, and or the release of details surrounding specifics on these so-called deals. One has to answer a simple question. Where are these deals? We will tell you where they are. They exist as political headlines, not binding treaties. There's no comprehensive trade agreement that removes tariffs or establishes enforceable rules. Most involve investment pledges and framework language, not detailed tariff schedules or legislative commitments. They still keep the majority of goods taxed at punitive rates, especially for middle-class consumers. I keep saying, we've reached a trade deal. We've reached a trade deal. We've reached a trade deal. You have not reached a trade deal. There's nothing inked in, nothing signed, no specifics, none of that. Okay, no scheduling, okay, and no legislative commitments. So it's all political, optical lip service. You like that? Optical. It's optics, audio optics and visual optics. This is all theater. Okay. What we expect to happen, okay, after the deadline. Tomorrow is the deadline. Yes, August 1st is tomorrow. Most nations haven't signed anything. Read that again. Most nations have not signed anything. And the ones that have agreed to weak, partial agreements. This means starting tomorrow, widespread tariffs hit full force. No phase-in, no exemptions. Maximum impact on American citizens, the entire middle class, and U.S. small businesses. They will get hit hard. This is like them taking a mace. You know what a mace is? It's like, picture a baseball bat. It's an old school weapon that knights used to use. This is a baseball bat with a bunch of nails in it. It's like taking a mace and just going wham and hitting small businesses and the consumer in the knee with it. Okay? I'm not going to get too upset. I usually get upset on my own program. I'm going to give this program the respect of trying to stay calm. If I get a little crazy, please forgive me. But as I read this kind of stuff, it makes me extremely angry because my friends, family, loved ones, and you, the viewers and the listeners, we're all going to be impacted by this. Our lives are going to change, and we're not going to recognize this place in a couple of years because of this. The market response. Initial volatility. Expect potentially wild swing in equities. Watch for semis, autos, industrials, agricultural assets to get hit hard. Defensive sectors like utilities, staple, gold miners may catch a bid. International facing companies like these listed below could take hits. So Ford, General Electric, Caterpillar, all these companies could take a hit. International biz, IBM, 3M, PACCAR, Corning, Cummings, all of those people. Economic impact, inflation forced upwards. Tariffs are import taxes. Prices will rise across the board. Cars, electronics, food, medical equipment, building materials. The middle class pays the price, not the foreign nations. I can vouch for this. I have imported many things. I am involved in importing. I talk to people who import all the time. We are not making money off this. The cost is being baked into the price from those who are exporting. Okay, they're not going to take the hit. We're paying for this. So when they say they're going to give you a stimulus because we're making all this money from imports or from the tariffs, that is an extremely misleading way to put it. They're giving you the money back they took from you and a pittance of it. Do you understand what this is going to do to the market? Another dirty little secret about the tariffs. Okay, even the supposed deals that aren't deals that they're talking about. Okay, especially from China. They're on electronics. They're on certain things. That doesn't cover everything. Dunnage, the stuff everything that you're all the packaging you see. Okay, fireworks, other goods that they ship over. The tariffs are still there. The high tariffs, over 50% on fireworks and on dunnage, stuff like that. They haven't done anything with that yet. Everything they do is to appease the market. All language that you see put out in financial reports, when they're reporting on the economy, it is to appease the market. It's so the market doesn't freak out. Small shops and independent manufacturers that rely on imported materials get hammered. Many will either raise prices, cut labor, or go under. Another wave of consolidation into megacorps. Consolidation is the key. The snake-headed gypsy tin benders at the Federal Reserve, they must consolidate to usher in this tokenized system. You can't have a bunch of corporations, smaller corporations, small businesses, small mid-sized banks. You can't have that when you have a mega CBDC styled fascistic monetary system that they're planning to dish to us. Okay. You have to have consolidation. The more consolidation, the more control over your life. You see, this is not what we want. Supply chain fracture. As we have covered many times, this is some Gregory Mannarino information that I have here. I'm just breaking it down in my own language, basically. As we have covered many times, global suppliers will bypass the U.S., rerouting through BRICS-aligned nations. The middle class gets slaughtered. Higher prices and more layoffs in manufacturing, more debt, more credit dependence. And worst of all, they told us that these tariffs are patriotic. Strategic framework for the beast system playbook as follows. Create crisis, blame external enemy, tighten internal control. Trump will use tariffs to blame China, Mexico, and EU to deflect from the collapsing real economy. Again, alchemy. Watch this hand, okay? This foreboding enemy who wants to come and suck the soul out of your eyeballs, all right? While this hand actually has a butcher's knife, and it is slowly peeling chunks of skin off of your economic hide, all right? The consumer has been blasted. All right. It's like a bazooka came in and just blew them apart. Eyeballs rolling on the ground. They're on their hands and knees eating dirt and dust, trying to get up. Okay. They find their eyeballs. They find one. They are able to put it back in their head. They say, okay, I can see a little bit. And here come the snake-headed gypsy tin benders and the government and all the people that play the games in this incestuous, fascist relationship we have between the banks, the megacorps, and the government. And they kick you in the head again while you're trying to get up. And that eyeball that you had goes rolling around on the ground. You can't find it anymore. And then they send an alligator in, and he comes and he starts ripping you apart. We're done. The economy is cooked. They're slowly carving up the consumer, the middle class, like a turkey. They do not care. When they're done, they're going to take our wishbone and play the game of, you ever play that game with the wishbone of the turkey when you were a kid? That's what's happening. All right, I'm sorry. I'm starting to lose it a little bit. I get a little excited when I think about what they're doing to us. We have children. We have grandchildren. We want to leave them something better than what we have. And they're making it so we can't do that. And they're doing it on purpose, and they're enriching themselves. If you're a Trump supporter, forget about politics. Forget about the team. Forget about the social issues they throw at you. Look at the economy. It's a uniparty. They don't care about you. Any emotional reaction they get out of you. Think I like a drag queen story hour? No, of course I don't. What person with common sense in their head would? That is thrown out there. It's a bad thing. I'm not sticking up for it or anything, but that is thrown out there to elicit an emotional response from you. So you're focusing on all this other stuff, not the economy. Well, the Republicans are fighting all this. Are they? Are they? I digress. I'm going to give myself a stroke. I need some water here. So we had a report a day or two ago. The GDP, it's rising. The GDP is rising. That's what they're telling you. Just to let everybody know, when they calculate the GDP, they put in government spending. Since the government is spending way more money, of course the GDP is going to rise. How can you calculate something like GDP, which is very important? Okay, it's for the health, to get a vision of what the health of the country's economy is like. And you're going to put in government spending. That should not be in the basket of goods measured for the GDP. Okay, it just shouldn't be there. It doesn't make any sense to me. Does it make any sense to you, ladies and gentlemen? You don't have to be a rocket scientist economist to see through all this garbage that they do. So GDP illusion has hit a critical mass, inflating life into the corpse of the economy. The U.S. government spending has now gone interplanetary galactic. With that, GDP should skyrocket as the government counts spending towards GDP. However, with the economy, it's quite another story, the real economy. What is developed is a direct reverse relationship between GDP and the economy. At this point, we have officially crossed over. The inverse-reverse relationship is a death loop, and it now comes visible. Bottom line, we have reached a critical mass. We're going to break this down in detail. The GDP death loop. When spending masquerades as growth, GDP has become a broken mirror. U.S. government spending has gone planetary, galactic. GDP should skyrocket as the government counts spending towards GDP, but the real economy tells a different story. GDP product consumption, this is how they break it down. Consumption plus investment plus government spending plus exports and minus imports. So when the government borrows trillions and spends it, it is put into the GDP and it goes up. There is no requirement that the spending be productive. The illusion. Spending equals growth. In this broken inverse-reverse system, even if the spending is burning dollars into the wind, it is still counted as growth. The death loop mechanism. Let me make this so I can read this a little bit better for you. I can't see it. There we go. Here's how the death loop works. Government borrows more. Spending surges. GDP looks strong. Investors and traders cheer growth as stocks rise. Fed is pressured to ease monetary policy and interest rates and monetize more debt. The real economy declines as inflation's job losses and debt crush people. The government responds with more fake stimulus. Repeat equals the death loop. This is not growth. This is the illusion of prosperity atop the skeleton of a dying economy. The inverse-reverse relationship. The GDP higher economy contracts. A paradox. A fake GDP, quote-unquote government spending growth masks what is happening to the economy itself. Real wages, manufacturing, all leading economic indicators, basically. U.S. industry, small business, middle-class people, and household wealth plummet. All while GDP prints expansion. You can't make this up. We now live in a reverse world. The higher the GDP, the worse the real economy gets. The more government spends, the more the middle class dies. The death loop becomes visible when this inversion is undeniable. And we are now here in that point. Babylon now counts the collapse as progress. GDP is a weaponized illusion, a metric built to sedate the masses, while wealth extraction directly from the economy and middle class continues. This is a great wealth transfer that Tony always talks about. Reality is decoupled from official numbers. In fact, it has gone inverted. This is the final stage of the fiat deception. Endless debt spending used to fake life signs on a dead body. Spending has gone galactic, but the economy has entered an abyss. GDP is no longer a measure of growth. It is a measure of how much fiat oxygen is being pumped into the corpse of the economy. And that, I couldn't say that more succinctly. That's why I love pulling up stuff from Greg and people like Tony, and we can learn from these people. We have another one here. This is extremely interesting to me because I study the bond market. And basically, more unprecedented things going on here. When I look at this stuff, a con man, could not dream up this kind of a scam. It is absolutely unbelievable the way that they do things. It is the biggest scam on earth. And if we could just get 25% of the population to understand how everything works with the economy, we could probably turn this around. But getting the voices out there, shadow ban, David Knight, shadow ban, Gregory Manarino, shadow ban, Gerald Celente, Tony Arterburn, Angry Tiger, Knights of the Storm, everyone's shadow banned. We can't get our message out there. Okay, they don't want our message getting to the masses. Can you imagine someone who's just a normal person and you say, hey, did you know that they just print money out of thin air? They really don't need your tax money. Create money. They don't print it anymore. Excuse me. They would have a meltdown and be like, well, why am I paying taxes? I mean, I know that's very simplistic for the listeners and the viewers, but to the average working man and woman who don't know about this stuff, and you can't get mad at them for not knowing, they're just trying to survive. Okay. This would be like groundbreaking information to them. They actually think that they have to pay taxes to live in this civilized society because that's the way it's set up. They don't understand that we can't even pay the interest on our debt. So because of that, they do things like this. Treasury says it won't have to increase coupon auction sizes for the next several quarters. I'm gonna break this down for you. So this is from Market Watch. The refunding, the Treasury Department announced Wednesday, it won't sell $125 billion in notes and bonds next week. The same amount as last quarter. It's because they always sell it off, to try to cover the debt. The issuance will refund $89.8 billion of the notes maturing on August 15th and raise new cash of approximately $35.2 billion. The department will auction $58 billion of the 3-year Treasury yield on August 5th. $42 billion worth of 10-year yield notes will also be auctioned off. Okay, literally, this is what's going on. Treasury announces $125 billion in issuance next week. Same as last quarter, $89.8 billion is refunding maturing debt. Only $35.2 billion is new cash raised. So how are they not increasing auctions despite higher deficits to cover those deficits? That's why they do the auction. They want to cover the spending deficit, and the debt. Endless war funding and record spending. The Fed is a backdoor funding this operation. It is a revolving door between the Treasury Department and the Fed, ladies and gentlemen. This is how they maintain the illusion of demand. The entire strategy scam of we the people masks a complete breakdown in natural buyers of U.S. debt. Without this financial sorcery, yields would spike and the bond market would collapse. So what is happening is the Treasury, you ready for this? I'm going to just break this down really simply for you. The Treasury is borrowing money from the Fed to buy more debt. They're borrowing money from the Fed because we have a massive sell-off. The Fed's in the market trying to stabilize the 10-year yield. Other countries are dumping our T-bills, our Treasury bonds, all right, across the board. 2-year yield, 10-year yield, 5-year yield bonds, all dropping. The ones that are coming to maturity, they're not going to yield as much. All right. So that's not going to cover the deficits that we have now. So the Treasury is borrowing money from the Fed, they're one and the same, to buy the debt that we can't afford to service. That's in basic working men and women's English. That is what's going on. We're loaning money to ourselves from our central bank, which is privately owned, by the way, okay, to buy the debt that we've created so they can issue more debt. Because if we make it so they can't issue one more dollar, the whole system collapses. This is unbelievable. This is unbelievable what is going on. We got in the chat. We got Dustin Helm. We got Bronco Stomper. We got Twisted Communique. What's going on? Let me see if I can get in the Rumble chat really quick, ladies and gentlemen. I just want to say hello to everybody in there. Take a small break from the news. I got some more stuff coming up. Let me see here. Let's get over to Rumble. See who's in the chat over there. Hopefully the Rumble feed's up. I don't even know if it's up right now. Let's see. Let me see here. Give me 1 second. Definitely, if you can, check out Wise Wolf Gold and Silver. Check out Wolfpack Gold. Definitely worth protecting yourself from the specter of inflation. Definitely, the times we live in, ladies and gentlemen, it really blows my face off. I wish I had the calmness of Tony. And that's one of the great things I love about Mr. Arterburn is he's a very calm individual. And I get a little bit morose when it comes to this stuff. Boy, this isn't cooperating with me at all. So what I try to do, I try to keep myself calm, but Tony is like a shot of Valium in the veins for me because he really calms me down. And he does this in a way that it's super highbrow and intelligent. And at the same time, a guy like me can understand what he's saying. And if you look at history, and that's what we do, we look at history. Here we go. There's everybody. We got Jason Barker from Knights of the Storm. Opossum King. We got Frank who needs to shut off the audio on that. Who else do we have? Dustin Helm, what's going on? Glad to see everybody there in Rumble. Karen Carpenter, Auntie Karen, the mother of the Tiger's Den, is in there as well. Who else do we have? We have Truth Refugee. What's going on? I hope I'm doing an okay job for everybody. Doing my best here to fill in some really big shoes. So we're going to get into something else. Again, if you guys are watching my show, you might know about this already, but we do have a radio audience that might not have heard about this. And this is really important to help you understand where we're at, what's going on here. And what this is a multipolar world we're living in. Have you ever heard that term, multipolarization or a multipolar economy? I'm going to break this down for you a little bit so you can understand exactly what a multipolar world is. Understanding the shifting global order. Okay. Here we go. Introduction. Why the term multipolar matters. In recent years, the phrase multipolar world has emerged as a defining feature of global affairs. Policymakers invoke it. Analysts debate it. Headlines reference it. But what does it actually mean? And why is it increasingly used to describe the future of international politics? This article unpacks the conception of multipolarity, its origins, its implications for global stability and competition, and what it means for the balance of power in the 21st century. Defining multipolarity, tongue twister. Rufus ran around the barn with a piece of liver in his mouth. Say that 3 times fast. Anyway, multipolar world is one in which power is distributed among multiple states or blocks, rather than dominated by a single superpower or 2 major powers, bipolarity. In a multipolar system, no single country can unilaterally shape global affairs. Instead, several states, each with significant economic, military, or political power, compete and cooperate with an increasingly complex international landscape. Common characteristics of multipolarity include the absence of a sole global hegemon, a rise in regional powers with global influence, competing values, interests, and governance models, and a more diverse, you'll see the word diverse, and fragmented international institutions. A brief history of global polarity. Pre-World War I, multipolar. European powers like Britain, France, Germany, and Austria-Hungary and Russia competed for influence globally. Okay, then we have the Cold World. That was a bipolar world. Very bipolar. The United States and the Soviet Union formed opposing blocs, shaping a clear ideological and military divide. Post-Cold War unipolar. The 90s and early 2000s saw U.S. dominance in military, economic, and technological spheres, often described as a unipolar movement. Today, many analysts argue that we are moving into a new phase of multipolarity. I said it. Driven by economic realignment, technological diffusion, and the assertiveness of emerging powers. So, The reason I bring this up is because the game has changed. The hegemony of the US dollar, which is being recognized worldwide, is declining. A new global shift. The BRICS nations, they have created solidarity. And I had Karen Carpenter on last night, and she was reporting some of the stuff that Solari report. Catherine Austin Fitts often mentions that this whole stablecoin deal and is to create a way to suck everyone into being back into the US dollar and maintaining it as a reserve currency. The Federal Reserve and the bankers of the Western Bloc have spilled 1 million gallons of blood and spent trillions and quadrillions of dollars to make sure that we stay the reserve currency of the world. That mechanism that we have is no longer working. And the three-headed monster of Ghidra, which I just pointed out to you, is laying the optical foundation, the real foundation, the practical foundation for us to not have that reserve status. And I'm a free market guy. I think competition is the way to go. And if we're not competing, if our competition, if we suck, okay, in the global market, we're going to face the repercussions. That's just how that's how the rocks lay out when you kick them. Okay. But we don't suck because of us. We suck because of policies. We had big sucking sound that you hear, like Ross Perot said there's going to be a big fat sucking sound with NAFTA. This is a plan, ladies and gentlemen, and I'm not into conspiracies that much. I try to stay extremely pragmatic about things. This is a plan. It's been in place for quite some time. We were built up. Now we're being destroyed. The economic policy of a lower dollar, a weaker dollar, as Trump calls for. This was the China plan. How do you think everything got moved over to China? Okay. We're not in the position to do this. China devalued their currency, kept the purchasing power of their currency low. So people would go there and use their manufacturing, use their services, okay? Because you can get goods and services cheaper from China. As they stripped the United States of America manufacturing power, and we are now a small puppy, and China is the big dog of the world when it comes to manufacturing, okay? Everyone buys their stuff from China because it's cheaper, and we did that as well, okay? We're not in the position to weaken our currency so people buy stuff from us. We would need probably 15 to 20 years of infrastructure improvement and bringing manufacturing back to our country to be able to do something like that. So this plan of a weaker dollar that they have in the current administration, it makes sense to those who don't know, but it really doesn't make any sense because we don't have the infrastructure. The whole idea is people will come and spend money here because our dollar is weaker and they can get things cheaper. We can't afford, when you weaken the dollar, the purchasing power of the dollar, the people in this country can't afford to buy things that are made in the US. Okay? It's not going to get so weak that other places where their monetary system is not right now, it's not up to par with the dollar. It's not up to snuff with the dollar. You think they're going to come here and buy stuff? The steel deal with Japan. We don't even have enough steel. Even if we had our manufacturing full blown right now, there aren't enough steel plants in the country. They've all been shuttered to supply the steel for the goods that we make. None of this makes sense. There is no economic policy. Like I said last night on my own show, the economic policy is that of destruction. That's the economic policy. No bueno. Not at all. What else do I have here for you here? What else do I have here? So, to wrap this kind of up, we got 10 minutes left. If there's anything you guys want to know, any questions, anything you want to talk about, throw it in the chat there. You can throw it on the YouTube chat. You can throw it into the X chat. Throw it anywhere you want. I'm gonna talk about stable coins a little bit. Give you my take on the stable coin. We're going to beg for CBDC, okay, compared to these stable coins. The stable coins are extremely, extremely dangerous. And this is why I say this. Now, with the CBDC, if it was actually created by the Federal Reserve, there's some rules that they would have to follow optic-wise just to make things, and legally, okay, to make things look good. But when you hand over our monetary system to corporations, and it's not really being handed over to corporations, the Fed, the corporations, the stable coins, they all must have holdings within the Fed. They must have a certain amount of holdings of cash holdings or of U.S. Treasury bonds or some kind of holding that the Federal Reserve is going to be involved in. The Federal Reserve is going to regulate, okay, the people who are going to issue the stable coins. This is a beard for CBDC. The most dangerous thing about the stable coin is, again, our money supply and everything that we do in this country now is true fascism. And when I say fascism, I'm not talking about what the left means. Oh, Nazis and racism and nationalism. And no, okay, that's not what I mean. True fascism is the government and corporations, the state and the corporations, okay, in bed together. And we have that right now, only we have this third party, which creates this incestuous relationship. And this third party is the Federal Reserve, the central bank. They are the motor of it all. Okay, they're the engine under the hood of destruction, of currency destruction. They want to be the buyers and lenders of last resort. And when our Treasury Department is borrowing money from the Fed, okay, so they can buy more debt and issue more debt, what does that tell you? They have become the lenders and buyers of last resort. They're issuing the debt, they're buying the debt. Unbelievable. I can't even think of a Ponzi scheme to compare this to. I can't even think of it. My mind is not sophisticated enough to come up with this, or maybe not. It's not addled with the worms of greed, like these venom-covered, no-good, snake-headed gypsy tin benders at the Federal Reserve are. Okay, these people dance around a cauldron of boiling mercury. They find small fuzzy creatures to throw in there so they can dance to the screams. It's like music to them. Suffering, megadeath, blood, and death are music to the snake-headed gypsy tin benders' ears. Music to their ears. I digress. So back to the stable coin. So now we have corporations who are going to be regulated by the Fed, who have to hold a certain amount of assets classified by the Fed in T-bills or in US dollars or whatever it might be, petrodollars, okay? They're going to be regulated by the Fed, but there's a caveat legally, okay? You hear people talk about, well, you're not going to be able to buy so much meat. They're going to, with carbon, they're going to be able to control, say you're a dissenter on social media and they look at your social media and they don't like what you say. Then they can turn off your money, okay? It would be a really hard trick. Okay, because we still have the Constitution. I don't know how long that'll be there. We still have some laws in place to kind of like bridle the Federal Reserve and the monetary system, all right? It would really be really hard to do that if the Fed was issuing the CBDC. But if you have a handful, probably 2 or 3 corporations to create the illusion of choice, handling the monetary system through the Trojan horse, okay, of stable coins, tokenization, all right, they're going to be corporations. And if you know anything about corporations legally, they have rights like a citizen does. They don't have to follow the same rules, all right, that say the Federal Reserve or a bank would. They can put stipulations legally on who uses their money and how they use it because they're a private corporation. Now, I know a lot of libertarian-esque people, they, well, yeah, that's a good thing. You should, they should be able to do what they want. It's a good thing if we had a free market. We don't have a free market. We have this fascistic market. We have this relationship between the Federal Reserve, the government, and the megacorps. Okay? They buy everything up. They own the market, the stock market. All right? They basically, they tamper with the price of precious metals, which is measured in fiat currency again. So we don't even have a good take on how much our gold and silver really are worth. They meddle in the crypto market. All right? There is no free market. Everything is manipulated. True competition, all right, true innovation that could be had if we had a really, truly free market is stifled by the fascistic market system that we have in place. This is a danger. This stable coin, remember the FTX scandal, okay? This is laying the foundation. The Fed doesn't want competition. They need to make regular crypto look like it's a nightmare. They want to scare people away from that. At the same time, the new administration comes in, stabilizes the opinion of crypto. Okay, starts normalizing a little bit to get these buzzwords in the consumer, in the aggregate's mind. Okay, because this is all about preparation. You guys know about this. They lay the Vaseline out, all right, long before they're about to do something bad to you. Try to stay nice and clean here on the show. All right. But they always lay the foundation, the groundwork, the mental prepping, the propaganda, the mind control to get the aggregate used to what they're about to do, to get it normalized in their subconscious minds. You're not even conscious of a lot of things they put in your mind. And then subconsciously, it's back there because we retain everything we hear and see. All right. Not consciously, but subconsciously. People who can do it consciously, they're savants. All right. When it comes to that stuff, photographic memory and the such. All right, but we all store it subconsciously. That way, when that thing happens, all right, that crazy thing happens, it's more normalized for us because it's in our subconscious brain. They're doing the same thing with crypto. Crypto's been normalized a little bit. Now they're shifting over to stable coins. Let's get them into the stable coins now. They're getting used to crypto. We're manipulating the hell out of that market. I hope that wasn't a bad word here for the radio. Sorry. They're manipulating the crap out of that market. So now we're going to get them used to the crypto. We're going to pull the rug on that and say, look, we have something. It's called a stable coin, the name stable coin. So you could feel safe with that. Then we'll be able to control inflation in real time because by that time, remember I described how we're going to be. We're on the ground. We're eating dirt. Our eyeballs are rolling around. We're trying to find them, put them back in. They keep kicking us while we're down. We're going to be worse than that. The alligator is going to spread our body parts all over the place. The snake-headed gypsy tin benders are feeding on us, and they're going to say, hey, we have the solution for you. We're going to be able to control everything in real time with our stable coins, which really aren't stable. Okay? Because it's the same game. It's the revolving door of debt. It's the revolving door of the Treasury Department, borrowing money from the Federal Reserve. The bankers will never relinquish control. They will go to war. They will have and will spill millions of gallons of blood. Okay, to make sure that they stay in control, that they are the buyers and sellers of last resort. Truly, truly an evil, evil plan. How many innocent lives have been lost? How many people's standard of living has been destroyed? How much success has been sucked out of our country? How many small businesses have been destroyed? This is a matter of morals. This is a matter of, and I'm going to get, I know this is an economic show. Okay. But I'm going to get a little spiritual right now. This beats you up inside. The news beats you up inside. Protect your spirit. Protect your soul. Protect what you have inside of you. Do not let this destroy you. You have something precious no one can get at. That's inside of you. You have the power of love. You have the power of hope. Keep these things near and dear to you. Keep your family, the important things, near and dear to you. Those are your real riches, ladies and gentlemen. Your real riches are who you are inside, the love you have in your heart for your friends and family and loved ones. This is the true treasure. This is what makes all of us extremely powerful individuals. Love. Don't forget about that. Don't forget about hope, because you can accumulate all the physical assets and riches you want in this world. But if your heart is bereft of love, if your soul and your spirit are bereft of love, you're truly a poor person. And if you're a poor person in goods and you're rich in the heart and rich in the soul, you are truly a rich person. With that being said, we got a little under a minute here to go, ladies and gentlemen. Remember, when it comes to commodities, I always say this on my show, and I'm going to leave the viewers and the listeners with this advice. If you've listened to me before, you've heard this a million times. When it comes to commodities, time is your most valuable commodity. Spend it doing something you love, with someone you love, improving yourself, preferably all three of these things. Ladies and gentlemen, I hope I did a good job filling in for the wisest of the wolves, Tony Arterburn. He is truly, truly an angel, a powerful angel. And he does care about all of you and what he does. And at this point, I believe it is time to end the transmission. What an honor it was to be here today. God bless one and all.
In a world of bulls and bears, you